it's the beginning of a new year. In fact, the beginning of a new decade. Now, it wasn't that long ago that I remember the turn of the century when we were all worried about the Y2K bug. All those predictions of mayhem, the predictions that didn't occur. In fact, now we're 20% through the 21st century. Now, that's a scary thought, isn't it? So what's ahead for this new decade? I'm sure there's going to be lots more scary predictions, ones that probably won't come true. So that's my first prediction, that most predictions will be wrong. But to get an idea of what might remain the same over the next decade and what might be different, particularly with regard to our housing markets, let's have a chat with Australia's leading housing economist, Dr. Andrew Wilson, Chief Economist of myhousingmarket.com.au. Happy New Year, Andrew.
Same to you, Michael. Yes, welcome.
Well, some things are going to stay the same, and I bet you there's going to be a lot of changes. So let's have a talk about some of those, and I'd love to get your thoughts. I think one of the things that's going to stay the same, that is going to underpin the long-term prosperity of Australia and our property markets, is our population is going to grow. Years ago, they were talking about a big Australia, a small Australia, but it really seems like both sides of government intent on allowing more people to come to Australia to, I guess, balance out the retiring baby boomers.
Well, Australia has been a high migration country for decades, Michael. Of course, it's built the country, and all parties, certainly the major parties, are committed to continue relatively high levels of migration. They understand that that generates economic growth, and it sort of adds to the, I guess, the flavour of our nation in terms of its cultural mix. But certainly that has challenges in terms of the capacity to supply, I guess, new migrants with the type of economic infrastructure that's required. And the fact that Australia is a high choice destination, or a first choice destination for many, it means that we can be quite selective in terms of our migrant intake. And again, that's just another positive in terms of economic energy that migration creates. But in terms of the housing market, of course, migration is a positive for housing, because migrants need somewhere to live when they come here. And if we continue to be a high migration country, which I'm sure we will, that will continue to fertilise the housing market and will continue to underpin what has been for decades a robust and reliable housing market.
Well, we're at about 25.5 million people today. The suggestion is by 2030, we could be up to 30 million people. The majority of that, just over half of it, was going to increase by migration, as we said. But where are they going to go? It seems like they're still going to concentrate in our three big capital cities, because that's where the jobs are, Andrew.
Absolutely. Well, that's right, Michael. And I think policies designed to try to push migrants into regional areas are doomed to failure. All they do is, there has to be a time limit, obviously, to constrain people in these particular regional areas. And what happens, of course, like with any sunset clause, once that's up, they rush back to the places where the jobs are. And that just creates a stream of incoming migrants to a regional centre, and then a stream of outgoing migrants to the big capital cities looking for work. Got to create the work, the opportunities in the first instance that will attract migrants to those regional areas, I believe. So let's hope we get some policies designed for decentralisation in terms of economic activity that will create more of a balance between regional versus city migration.
Well, Andrew, it's not just for the migrants, because there's been a trend for the young people to leave regional Australia as well, to go to the big smoke. So you're right, if we want to decentralise, there's going to have to be some different policies. But currently, there seems to be the trend to go to where the big jobs are, which are in the big capital cities. And that sort of population growth we're talking about is going to require 170 to 190,000 new dwellings each year. And our building industry, in my mind, if we're saying what's going to remain the same, will remain cyclical, because we do have these long lag periods. To be able to build so many dwellings at the one time, you can't do it as much in the infill areas. So we're still going to have lots of new Legoland high-rise apartments. We're going to, in the future, have lots of new housing estates. But the waves are going to continue. The property cycle is going to continue, Andrew.
Well, perhaps, Michael. I think it'll be a lot flatter going forward. I think we're into a new reality in terms of our a longer-term economic energy. I think it'll be flatter. We're not going to see that roller coaster ride.
As we're going through the list of what isn't going to change over the next decade, Andrew, one of my thoughts are The get-rich-quick artists are going to be there. The property spruikers are going to be there. The property pessimists are going to remain there, saying we're in a bubble that's going to burst.
Well, I don't agree, Michael. I think that we might even see, thankfully, the end of the doomsayers and the spruikers, because we will have this flatter cycle. So predictability and certainty will be more obvious because we won't have the highs and lows of the cycle. It'll mean that fertile ground will disappear for spruikers on the upside or the doomsayers on the downside. I think that's a good thing for our property market. And it is a new world going forward, I think, because of that. And it does reflect the new economy in the next decade.
Oh, I agree that we're not going to have as big a cycle. I think that people are going to still look for that get-rich-quick scheme and try and find a shortcut, especially since capital growth may not be as strong. I think another thing that won't change, though, Andrew, is Australia's aspiration for home ownership. I think that's one of the things that's going to continue to underpin our property market.
Oh, absolutely, Michael. And migration is a key factor there, because we certainly have a higher proportion of East Asian migrants now in our country. And the aspiration from all migrant sources is for home ownership, because of a lot of our migrant backgrounds, East Asian, European or Anglo-Saxon background, we come from cultures where there was significant constraints to home ownership and home investment. And that's why we've created this very positive environment for home ownership and very strong aspiration for home ownership and home investment. And that'll continue to fertilise demand going forward. And I do think we're actually going to see more home investment, Michael, from a different source. I think given the fact that we're going to have very low interest rates for a long period of time, I think through the next decade, that'll mean that the return on income from particularly bank deposits will have those particularly on fixed incomes looking for alternative low risk asset classes. And I think that'll mean more property investment, given that the likely track of yields will remain quite consistent and certainly above any other asset class with the same sort of risk profile.
I think another trend that will continue into this new decade is the move to medium and high density apartments and townhouses. People are going to trade backyards for balconies and courtyards. They're going to want to, as our cities become bigger, be in closer proximity to amenities, to lifestyle, to public transport. And that means that the established leafy areas that we already have in our big capital cities are going to become more desirable, and the rich are going to, and the people with high disposable income are going to want to keep living there, Andrew.
Yeah, that's right, Michael. And I think obviously apartment living is going to be even more profound in terms of growth and the nature of our communities, particularly the bigger cities. There's still obviously capacity in Brisbane and Melbourne to continue out of suburban, lower density development, typical detached housing. But I think even in those communities, there's a drive towards apartment living, not just because of affordability or amenity, but also lifestyle choice. I think there'll be a growing lifestyle choice for apartment living generally, particularly in our big three capital cities. The challenge is, of course, is where do we build them? And I think that there'll be a clear momentum that suburbs that precluded higher rise development will start to approve that type of a structure. We have to have a mix of medium density and higher density in suburbs to try to ameliorate the concerns about densification. But certainly, I think there's no question that we will see more apartment development in Melbourne and Sydney and Brisbane, and in areas where before there's been substantial resistance to higher density development. And of course, this becomes a very significant political problem and a challenge for governments, which given the demand for property and that type of a property is going to have to be met, that challenge.
You're right. It is going to be a challenge for governments at all levels, because it's been shown overseas that big cities per se are not a problem. There's no city size that is too big if you've got the right infrastructure, if you've got the correct planning, if you've got the correct amenities for them. We just haven't got that mix right at the moment. There are a few vested interests at local government level that are obstructing development when the local councillors get voted in by a small group of noisy people who are NIMBYs not in my backyards or notes not over there either. It makes it very hard for the areas where most people want to live to get new developments.
Well, that's right, Michael. But I think that a lot of that activity will wane over the medium term. It's because the political drive will become stronger generally, particularly at state level where planning regulations lie, generally, that will override local community issues with higher density development. I think we'll see that because it'll just be a question of there's more votes in higher density than is in low density in middle ring suburbs.
Has to happen, doesn't it? So a
Yep.
lot of things are going to remain the same, and there will be more that we haven't even thought of. But I think there's also going to be some significant differences. And if you go into this new decade, particularly if you're interested in business or property investment, thinking the same history is going to repeat itself, you may get yourself into trouble. So Andrew, we're heading into a period of lower inflation, lower wages growth, lower interest rates, and you keep saying that that's going to lead to flatter cycles than we've had before.
That's right, Michael. But this, I think, is unquestionably a good thing because it puts more certainty and predictability into the market. It takes away a lot of the speculative element. It kills the hotspot mantra, and it means that property investment particularly will become more of a return on investment yield over the medium to longer term asset class rather than this speculative casino type of get in quick and get out quick. And I think that's a good thing going forward, but it does reflect the low growth economy that we're in. And as I said, I think that Australians will largely move even more to become a country of small scale property owners and investors because of that lack of return on income generally in the economy. Housing is going to appeal as that bricks and mortar safe as houses alternative for a whole new group of people who wouldn't have considered themselves to be landlords but are being forced to do so by circumstances. And I think that will drive, as you said, more construction and demand for property.
Well, as we're talking about things that may be different, I don't think the pension system is going to be able to cope. There's going to be more baby boomers retiring. Most will have by the end of this decade. And the baby boomers didn't have super in the earlier years. Some of the younger generations don't realise that compulsory super wasn't around. So a lot of baby boomers are retiring, some with debt, and the pension system won't cope with them. They're going to be using more of the resources of the healthcare system as well. Their super won't be enough. So you're right, some are going to need to invest if they've got the ability to do that. And as we move into this next decade, I guess the Generation X's are going to move into retirement as well. So really demographics are very much going to be driving our property markets as they always have, Andrew.
That's right, Michael. And I think the interesting thing in terms of superannuation is that when the decade began, superannuation returns had been as high as 10 to 20% per annum. And it was almost as though it was a magic pudding to put your money into super and you get these great returns. I think going forward into this decade, we're going to be very lucky to see anything at 5% or above in terms of superannuation returns and probably a lot less than that. Of course, that's just part of that general decline in the prosperity effect, which is reflected in that compulsory saving element. And that works its way again into restriction on retirement incomes, Michael. This is this new reality of low growth. It's almost economic ice age. I don't want to be a doomsayer, but certainly it's going to be a very stagnant period of growth this decade, I believe. And my concerns aren't on terms of economic shocks. My concerns are regarding political and social shocks as a consequence of this moribund economic global environment that we have. And that's where I think that the real dangers and fears lie going ahead. If we are to look at history, perhaps there are history lessons there to show that surprising or unpredictable economic environments do lead to social and political disruptions going forward.
Well, you're right. The rich keep getting richer, but we keep hearing that the top 10% own close to 50% of the assets, and the middle class in some ways is falling back as well. So it's not just the poor that are getting poorer, but the middle class as well. So that will lead to a level of social unrest. I agree with you. Another issue is that a lot of the jobs for those people are likely to disappear in the next decade. A number of reports are suggesting 30 to 40% of the jobs we're familiar with today won't be here at the end of this new decade. Now, that doesn't mean we're going to have 30, 40% unemployment. I guess there's going to be redeployment, like the car industry leaving Australia. I think we're going to see fewer people doing more productive work, more offshoring, more artificial intelligence taking over jobs. So with lower wages growth, that's going to put a challenge on affordability of properties, Andrew.
I do think that is an issue you mentioned in terms of where jobs are going to come from. We're having a fundamental change in our retail sector because of the move away from bricks and mortar shop fronts to online shopping. That'll obviously be reinforced over this decade. But I do think the drivers that we sort of mentioned before of construction will still be quite robust. I think there'll be a lot of work in the construction industry going forward. there's probably not a lot of upside in terms of technology and productivity for construction. It's still reasonably labour intensive, particularly apartment construction, and there's a lot of tentacles that move out of apartment construction that drive economic growth downstream. So that's a positive as well. But yeah, look, I think one of the other issues is we mentioned the baby boomers and Generation X moving into retirement. A lot of those might have to forestall their retirement or postpone it because they don't have the capacity to survive on their superannuation or their nest eggs, which will mean they'll be staying in the workforce longer or returning to the workforce, which we've seen as the decade ended. We've seen a higher participation from older Australians in the workforce, particularly those that have already left the workforce coming back in because they can't afford to live off their savings and their nest eggs and their superannuation. And, that's going to be a conundrum, I think, in this decade going forward, that Australians may have to work longer to sustain the lifestyles that they thought they would have in their retirement, given, I believe, returns on investment are going to be a lot lower.
I agree with that, and we've seen that overseas where a lot of the older people are still there working in restaurants, serving, doing jobs.
Yeah.
I remember a couple of years ago, Andrew, I went to the United States and the valet coming to the hotel to take my luggage out of the car would have been in his middle to late 70s, and I felt too embarrassed to ask him to lift the suitcase out. He was able to. I thought, what a pity that people still have to. If they want to keep working, fantastic. It's a pity if you have to, though, isn't it?
That's right, Michael. And I think the points you made before about the disparity of wealth, and that's obviously an indication. America has the most, I guess, obvious disparity in wealth distribution. And we're starting to see that now raise its head in terms of the political outcomes, with a number of key proponents on the Democratic side of the equation in the presidential election now clearly advocating significant wealth taxes to try to redistribute that income, which really is at its extreme in America. But again, this just gets back to that driving force of people not feeling prosperous anymore and looking towards those that are, and understanding perhaps it's not fair that the wealth is not distributed a little bit more evenly. And again, this can work its way into social and political outcomes. We're seeing that to some degree in the United States, and maybe we'll see a bit of that in Australia. Not sure we will. I think that Australia has a bit more of an egalitarian mix in terms of its prosperity. We don't have that same really lopsided distribution of wealth that the US have. And we have a much better social safety net as well that will protect us from that. But certainly I think that, as you said, prosperity of the middle class will start to wane, given the lack of return on income that the economy is likely to have in this coming decade.
Another trend I can foresee is that China and India to a degree are going to become more powerful. And that can create some opportunities, even though I guess it could create some threats. If we get it right, we can be the playground to a whole new generation of middle-class Asians, Indians who are going to come here. We can also be the food bowl of Asia as well. So there are some good economic opportunities. We're already doing that to a degree. Tourism has increased a lot over the last couple of years, and that's a great export industry. People don't necessarily recognise that. And same with education, Andrew.
Yeah, I'm not negative about Australia's relative prospects going forward, Michael. I think that Australia is well positioned compared to other advanced economies. We have a very strong export sector, which will remain robust, particularly resources, mining, but we do have significant tourist sector, of course, and agriculture and education. I mean, those big four will continue to generate income for the Australian economy. And the question is for governments is how they will move to redistribute that income to try to offset the lack of drive for monetary policy and to create some sort of prosperity. And that is the challenge, that at least we're in a position that we have a reasonable budgetary environment. Perhaps we've got to start thinking about, as other countries do, not being so connected to a budget surplus and start to drive the economy from fiscal policy. And that may mean moving into a budget deficit. We've got to understand that other countries have significant budget deficits. The US is running at about 4% of GDP at a deficit, so over $1 trillion now. So maybe we should think about how we can quite judiciously use our good fortune in terms of the export sector that generates a lot of income for us to be able to create those jobs perhaps and to put money back in people's pockets.
Well, two more things that won't change in this coming decade. We're going to get together regularly and keep informing Australians about what's happening in the real estate world and the property markets and the housing markets and the economy. And I think the other one, Andrew, is we're going to be living in the best country in the world.
Absolutely.
The best time in history. We should be grateful for it because we won the lottery because we're here.
That's right. And you forgot to mention the best housing market in the world too, Michael.
Well, it is. We are very secure here. It's underpinned by owner-occupiers, and owner-occupiers go into the market with very different headspace than investors. So it's lovely to be able to invest in a market that's not dominated by investors.
Yeah, it's almost as though a lot of the negativity that misinformation that infects commentary in the housing market, it's almost as though it's too good to believe. That's why we believe the negativity. But anyway.
Well, it's a whole other topic. I guess the negative Nellies are going to be there. They're going to continue on, and that's a real pity. There will be people wanting to stop us enjoying the fruits of our labour and aspiring to get even wealthier.
Yeah, that's right, Michael. And it's going to be a much tougher environment for doomsayers. Take it from me.
Will be.
A property market doomsayers. Yeah. Perhaps there are other issues they'll be able to attract themselves to. Move on to another space.
Okay, thanks a lot. Look forward to talking with you regularly throughout this new year about what's happening in our property markets.
Yes, thank you so much, Michael.